Good morning, everyone. Welcome back to our weekly commodities update. This is where I do technical analysis on natural gas, oil, US dollar, gold, and silver. Looking at disappointing resistance levels, as well as what the most likely scenario where I think price might head into later next week. And I did the stock market update yesterday. So you guys are looking for data as well as technical analysis on the overall market, QQQ, S&P 500, as well as the 7 mega cap tech, Meta, Tesla, Amazon, Google, Microsoft, Apple, NVIDIA. Check the previous video. And let's get started on commodities. So natural gas, we're looking at this overall breakout for a while. I mean, last week we broke out. So within the daily time frame, and you can see rejection, 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 bounce, 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 bounce. So 7 times on each side, and you can see we finally broken out of this falling wedge over here. Right, rejection again, and finally broke out. So we broke out on Thursday last week, and now we're just kind of chopping around here, forming pretty much, I'll say still a bull flag. Let's measure it together. Yeah. So as long as we don't crack below the 0.382, it's a bull flag overall. So you could argue this one. No, this one is still this one hasn't broken. This one is with the same move. So until we hit here, then this was the retracement over here. This first one right here, because we continued up to this entire move. So from A to B. So this, you can see this is one move, and then this is the first retracement that we did on Thursday. So it's a big move down. Like it's 6.5%. It's quite big move overall, but it's natural gas. It's very volatile instrument. You can see all these big move downs over here as well, right? Some people would say, oh, this is the end of the move, 19%. Next thing you know, we rocketed 38%. So no red flags for me at this moment overall for natural gas pullback as of now. And I'm just looking at this rising wedge at this moment for visual guide. See, right? Rejection, rejection, rejection. So 1, 2, 3, 4, 5. And bounce, 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 bounce. We haven't really tested it after this breakout. So if it does come back, let's say we go sideways a little bit here, right? And then we continue from some kind of a bull flag here, hit this level, and then we'll see if it reacts to here again. If it does, then we're looking up to closer to up here again as well. Best case scenario for bulls is to hold this longer term breakout, especially this one. We don't want to break below into here again. It took us like what, year and a half to get out of this falling wedge. So I would like to see more follow through on the upside, even though this was, it's a decent move, right? 16%, but for something that's a bull break out of a year and a half, I definitely want to see more follow through. So we don't want to crack below here. So ideally, we hold above this 3.24, this level and this level. And if your chart looks a little different than mine, make sure you click this B80J button on the bottom right corner, because it will adjust for the contract gaps, right? If you don't click this, you have a lot of contract gaps, and you click this, it'll just take out the gaps. Yeah, so ideally we want to hold above this level 3.2, which we did so far. If we crack below here, this 3.2 range, then we definitely want to hold around this this $3 mark and this 3.6 mark. We don't want to crack below back underneath this maroon line. If we do, then I'm looking at this green line, the rising wedge support, right? So but we'll need a big drop, something like this, to crack through there. And if it does hold and we bounce back, then no big deal. But if we start cracking through all 3 of these, right, this one, and then crack through the maroon line, and then crack through the green line, and we roll over like this, then that's a huge red flag. That's a failed breakout. Come back all the way back into this 1.5 year pattern again. That would be a huge red flag for me. But for now, we don't have that yet. But those are the 3 scenarios I'm looking at. If it does crack through these levels, then that's going to be a bear break out of this rising wedge as well, and a break above failed as well in this falling wedge long term, and breaking below this 3 support. So that's going to be, yeah, it's going to be a major red flag if we crack through all 3 of these. But for now, we are above it. So best case for bulls, pull above this 0.3.25, which is exactly this bull flag low on Thursday, and which is also back testing of this prior high, now acting as support. And we just bounce from here, and then we chop around. That'd be the best case. Best case, go sideways, cool things off a little bit, and next thing you know, we go again. That'd be the best case for bulls. All right. If you guys want to learn more about techno analysis, check out my YouTube link and on the Patreon link as well. And have one-on-ones. If you guys want to learn more about how to trade futures or how to trade indices overall, or patterns, or if you want to trade earnings, all that kind of stuff, check out the Patreon link or book that free 15-minute call for one-on-ones and chat more over there. All right, let's take a look at oil. So oil is still just tiny up. Really no edge here. We've been talking about this one for a couple months with no edge. So this is the overall bigger picture. Resistance, support. And then we look for here in the last couple of months, really no edge, right? Top of the move, bottom of the move, right? 71.5 is going to be resistance. 66.5 is going to be support. Super clear, right? Just going sideways until it breaks out of this range. If it does break out of this range, right, 70 half, we will look for closer to the 74, which is this resistance right here. And if we do break lower, around 66, then we'll look for this bottom of the range, which is this 62. But for now, it's still chopping. My guess is probably going to keep chopping until it decides to break out. So no edge here, just completely chop fest for a couple months already. All right, let's take a look at dollar. The dollar has been really strong overall because we have been pricing in less and less rate cuts. And the less rate cuts we're pricing, the stronger it's going to be the dollar because it's relative to other countries. Because you know how when we say we have rate cuts, it's supposed to go down. But because it's relative to other countries, where other countries are cutting a lot more than we are, hence the dollar is a lot stronger, right? We're cutting by 25 basis points. Other countries are cutting by 50 basis points. And every time, like Canada. So dollar's continuing strong. But we are seeing a little bit of lack of follow through, right? We got that FOMC last Wednesday where the Fed says that they're going to cut less, going from 4 to 2 cuts. We got this big move up, and that was it. So we are still trading that reaction level. So as long as we don't break above this reaction level, I think we might be pricing a little bit too little of a cut. So let's see how this ends up trading. This will be also a bull break, weekly bull break, higher high, and lacking follow through because we just poked above it, right? This higher high, and then we supposed to get some follow through and no zero follow through. That's one. So if we do come back, crack below this low and confirm a little daily downtrend, then I would say this could potentially be at least near the top. We need to see a bigger move down to confirm this is the top. By the moment, this is looking a little bit like break above, lacking follow through here. So we'll see how it ends up playing out this week. And we have a lot of policies from the government, right? New policies coming in January and February. So we'll have to see how it affects the dollar. So that's going to be a big one as well. So we won't really get, I don't think we'll get a big move until maybe closer to January. So we have to keep an eye watch on that as well. All right, let's take a look at gold. All right, so the daily time frame. Yeah, really doing not that much still. It's just tightening up, tightening range here. Very clear on the weekly, right? Big move up, big move down, big move up, big move down, big move up, big move down. So yeah, until it breaks out of this range, it's gonna continue to tighten out. You can see all these like upper wicks, lower wicks, right? Is super clear. Kind of just like a tiny range. And we'll see if the bears decide to crack this lower right here. because this is a really big move down, and this is so far looking like a little bit of a bear flag here. Let's see. Yeah, so it's a bear flag at the moment. We're not above 0.382. As long as it's below the 0.382, which is yellow box, it's going to be a bear flag. So if bulls can't crack above here and they make a lower low right here and crack through this low, that's a bear break out of this tiny range where we've been tightening for many months. And it'll also be confirming the trend as well. So if we do crack through there, I'm looking down closer to this 2570 around this, which is this structure right here, which is the last support where we bounce from right here. But if the bears don't crack below here, that's why we come all the way down here and bounce from this green line again, and then make a higher high. Then bulls have the trend back to their favor. But we need to get above this 2660 area first, which is this cluster of consolidation we had for like 2 weeks right here in this level. You can see this level is acting as resistance right now. Right here is the low of this structure, and currently it's acting as resistance. So bulls need to crack above this structure, bare minimum, for any kind of upside move to even come back to test here. This is going to be the key structure first. They need to break above. And let's take a look at silver. It's probably relatively weaker, I guess. Yeah. So it's still relatively weaker overall. No real signs of any. Just compare the chart. So this big move down is pretty much this big move down. So this move cracked a lot of the moves below. So yeah, it's really not been doing much for overall. So if I were to play on the bull side, I will play gold. But at the moment, so it really hasn't really done that much in a long time. Because if the leader of the space, right, for gold is weak, then you're really not getting much. You won't get much follow through overall on the bounces. Yeah, it's pretty similar chart overall, right? Let's see. Bottom of the move, which is this move, and silver is pretty much just above it. Yeah, similar, but it did held a little bit, a tiny bit better over here, right? This low, see this drop? It's this entire drop, and then on this bounce, it is a little bit better here, but then once this drop came in over here, it cracked below this low, so we made a lower low right here. That's what that relative weakness was from. So yeah, if we were shorting it, then it would be better shorting silver overall because of that lower low. So the structure of the chart is not as great because of cracking this low, lower low on silver. Yeah, it's like a weekly downtrend, whereas this gold is it's just a tiny range. Yeah, you can see no weekly downtrend, but this is a weekly downtrend confirming. So overall, metals are still weak, which makes sense. The dollar is super strong. I mean, if we see the dollar start to weaken a little bit and metals start to be a little bit more live, then we might get that shift right to the bull side. But at this moment, I'm not seeing that yet. Still pretty much closing all-time highs. So we have to see that narrative shift, or maybe we'll see that shift in January. But for now, we're not seeing that at this moment. So keep an eye watch on it. And yeah, that's all I got for you guys. Have a great Happy New Year and holidays. And if you like, share, subscribe, you guys made it this far or learn anything. And I will see you guys next week for more updates. And Wednesday is going to be holiday, no trading. And take care.